I think the question that everybody who's investing in the stock market is, where's it going from here? Is it going to spike up? Based on what's happening with AI, yes, it is going to spike up, and I'm probably going to make more money in the stock market over the next 5 years than I ever have in my life. But on the short term, where's the bottom? Are we at the bottom now? I don't believe so. I think we're about halfway there, and I think I discovered something in my charting that gives me a good indication of why we are halfway there. So let me take you to the computer and show you the charts that I discovered that I think gives the answer, where's the bottom? Okay, this is probably a different way of looking at charts than you've ever seen. This is the QQQs, and I use the QQQs because that's where my money is. I'm investing on disruption, on technology, on AI, on semiconductors, on data centers, and I believe that's where the future is. My question is, where's the bottom, and should I be raising cash now to take advantage of the bottom? This is, as I said, a monthly chart of the triple Qs, and I've put in some Fibonacci retracements to give me some indication of when it does correct, how far does it normally come down. But what I did that I think really lit me up was I expanded my MACD and my RSI, and I was shocked. Look at this. This is the MACD. Well, no, the first thing that struck me when I opened this up was this. This is the volume. If I had told you that there was 5 times as much volume during the subprime crisis than there is today, would you say, no, that can't be? With computer trading and quantum trading, there's much more volume now than there was back in 2008. No, it's about a fifth. Why is that? Because the smart money doesn't trade in this stock market. It trades in the private market. It trades in those companies that are not yet available to the amateurs, okay? They don't want to play with you because you don't act rationally. And it's evident here. Look at this in the MACD. This is its movement in the MACD. Look what's happened since 2020. The movement and the strength of the movement has just blown up. The other thing that then this is the relative strength. And what struck me was this is where we are today, okay? That's exactly where we were right here in 2023. And then let's match it with the relative strength. This is where we are now. This is where we were in 2021. So can we look at that and say, we're halfway there? The other thing I want you to look at this. This is the strength of that downturn. If I put that right there and I come across here, I'm about 2.5 times further along than I was in 2022. I'm 2.5 times closer to the bottom than I was in 2022. And here's the bottom in 2022, which would bring us out 7 months. So I'm looking at that and saying, if I'm 2.5 times, this is going to last about 3 months. So I gotta come here to there to about there. And that's if I'm in April the 22nd, May, June the 22nd, I hit the bottom. Okay? And it's going to be somewhere, or if the QQQs are at 444 today, it's going to be somewhere around 380. Okay? Because I've got to satisfy this. This is a movement. And again, looking at it, this is saying to match this with this. Again, I'm in the 1/5 month. I'm closer to the bottom, but I've got a ways to go. Okay? So I'm looking, as I said, I'm going to break the Fibonacci, which that's 50% drop from the high, and I'm going to end up somewhere around, let's call it 380 on the QQQs. Okay? So what do? My stress or my direction is to go to my tell sheet and look at my stocks and say, okay, based on the projections that I've created through doing my financial health analysis on the stocks, and then looking at how far a stock is off if its 52-week high, how depressed it is, who am I going to get the greatest gains from? And I come over here, and based on the analysis that I've done, my biggest gain right now is ACLS that at about 400%. If I come down here, Nebitas are, no, this is Nebitis. This is another data center. It's at 409. If I come back, here is Ultra Clean. It's at 216. And then if I come across on one of the reasons it is going to give me, this is the return based on the price it is today, $18.95, and the price that it is projected to be based on this analysis, $60 on January the 2nd of 2028. That gives me a 216% return from today's price to where it will be based on analysis. And again, here is NBIS. That is, for those who need a name, I don't know why they don't use simple names, Nebitis. Again, a data center in the Netherlands, based on its current price of 21.43 and the analyst projections of price in 2028 of 110, it's going to give me a 413% return. So that's what I look at it and say, all right, where can I get the biggest bang from my buck? And how can I follow these stocks down and see if these numbers go up? If I'm right that we've got another 30 to 60 days of downward movement, which ones do I want to buy in? And then equally as important, which ones do I want to sell? Which ones do I want to sell to raise money to maximize my return on my investment? And again, realize this is current price. This is about as low as it possibly could go. Although, as I say, I think we got 30 to 60 days more of downward movement. And if you'll come to my chart, you'll see where's the best bet? Where's the biggest rate of return based on current price and future projected price? A company you know nothing about, Excelis. It's in the semiconductor business. If you want to know what it's about, go there, and that'll give you probably a 13-page document that will give you everything you need to know and most of what you don't understand about the company. And then go here, and Bart and Samantha will give you a podcast where they'll explain to you what the document told you. And then if you don't want to spend that much time, this is a briefing. It's about a 3-page document that summarizes everything. So it will tell you, does Kerry have any clue about what he's talking about? Is ACLS really going to go from $44.75 to $225 between now and January the 2nd, 2028? If you don't believe, then read and listen to and understand. And then go through each of these stocks and say, what about APLD? That's another data center up in North Dakota. I just did that analysis, 6 days ago, because that's when they did their earnings report. And it's selling for $4.21, and I'm projecting it's going to sell for $15 the end of 2027, first of 2028. And again, if you want to know what those numbers are based on, artificial intelligence has done a total analysis of their financial strength and given you all the information you need to make an informed decision. What else could you want? Okay? This is available on what I call my tell sheet. I do it for 60 stocks, and then this is my portfolio, and I go through what I'm going to make. I I basically say I have about $605,000 allocated to this part of my investment holdings, and that is semiconductors, data centers, and the like. And I'm projecting that 605 will be worth $1,284,000 on January the 2nd of 2028. And I can change that merely by taking those that I'm going to, I'm not going to make as much on Apple. I'm only going to make 41%, but I'm going to make 200% on ACLS. So if I want to make more money, and I believe strongly in ACLS, I just need to move some of my money out of 19,000 out of Apple and into ACLS. I can do that all the way down. But I want to own Apple. And I've told you other reasons why. And it's because I think Apple is going to be the leader in delivering me to my phone all the health information that I need to keep me alive another 20 years. And that'll be my 100th birthday. So, okay, I'm excited about this. I'm excited about what I showed you here on this chart. I think this is very telling, using history, using the relative strength and the MACD, and seeing this huge divergence from, I mean, I'm going back to 2000, and they have never shown this much volatility in the market. And then seeing that never has it only happened 1 month. But the strength of the movement is roughly 3 times what the 1 month was here, probably 7 times what it was there, and 10 times what it was there. So it's just moving faster. So we've got to be ready for when this turns and goes green. Okay, I hope that's helpful to you, because I have one desire and one desire only, and that is to make you an informed investor and to recognize that's now possible as a result of your access to data. And then you can get an agent like I have and pay them. First you pay for access to the data, and then you pay for the compute and the large language platform that will point you in the right direction, and then you have to make decisions. And the best way to make decisions is with knowledge. And I hope this helps build your knowledge base. And what I'd ask you, I got a comment just the other day. Would you mind, Carrie, if I shared this on my Instagram page, the video that you just did? Because I have a lot of people that I think a lot of, and I want to help make them better investors as well. By all means, do that. If this helps you make better investment decisions, and do not take my word for it, study it. Go listen to the podcast that Bart and Samantha have made, and read the documents that Samantha has created. Best of to you. I'll do as much of this. I'll keep searching, and you keep coming back. All right? Is that a deal? Talk to you again.